Hi guys, good afternoon and welcome to the CNBC-TV18 Mumbai newsroom. I'm Pavitra Parekh. You guys are tuned into your stocks and we have lots of queries coming in. We're going to get to it in just a minute, but spare a look at the markets right now because we're pretty much at the low point of the day, just slightly off the day's low. It's a near 0.9% cut that we are seeing on the frontline index. So over 150 points gone on the Nifty. And, in the past few minutes, it is really the metals pack, which, of course, in addition to the financials and IT that we were seeing in the morning, it is the metals which has come under pressure right now. So whether you look at Hindalco, Tata Steel, GSW Steel, all of these seeing sharp cuts. Of course, the bigger, losses coming through from the Nifty Bank, which is down around 540 points. Led by the private bank. So it is seeing a pretty steep cut there. The Bajaj twins are under pressure for the second straight day after, the update missed estimates on the AUM front. We'll talk more about that in just a bit. And also IT, because remember the IT earnings, all of the large cap IT earnings are next week, starting with TCS on Monday. So all of those stocks also under some pressure. What's holding up is the insurance space. You have a few of the consumption names, but a lot of the consumption names that were doing well in the morning have also slipped and are pretty much at the low point of the day, the likes of HUL and Tata Consumer. That's the market action. We'll come back to this, but first up, let me invite our guests on the show now. We have Vijay Chopra, Managing Director and CEO at EnochVentures.com, as well as Kush Bohra, the founder at KushBohra.com, to answer all of your stock-related queries. Vijay, Kush, thank you very much for taking out the time and joining us to help all of our viewers with their queries today. I'm going to get straight to it. The first one comes in from Vikram Shenoy, who writes to us from Mumbai. He says he has 150 shares of Bajaj Finance bought at an average price of 5,500 rupees. He's a medium-term investor and he wants to know whether he should hold or, move some money to other stocks like maybe an ICICI Bank or SBI. Vijay, let me come to you on Bajaj Finance. This is a good week, of course, to be discussing it. We got their Q3 update. What do you make of it? Of course, there is a miss on the AUM front, but do you think with a medium-term view, this is still, a good stock to hold on to?
I think that, the kind of guidance the company is giving, they are quite skeptic about the growth. Yeah. So I think that, at this point of time on the charts, I would say that, they are not looking good. Both the twins, Bajaj Finance and Bajaj Finserv. So I would say that, just wait a bit before actually, just buying into it. So I would, or you can exit on rallies. There are other opportunities in the market where you can save your capital. But I think both the Bajaj twins, as of now, do not look that good. So it's better that, you should exit on rallies or keep a very strict stop loss. That should be the strategy.
Okay, exit on rallies. Vijay, he's also asking, should he move money to stocks like ICICI Bank and SBI? This week has also seen ICICI Bank under pressure. I mean, of course, after it did rally quite a bit. But what do you think about these two stocks, ICICI Bank as well as SBI?
Well, the banking space has seen quite a huge run-up, and I think that they are going to take a breather. And this breather can last up till budget because, all the finance companies, including banks and NBFCs, they would keenly wait for what happens in the budget. So I think that, it's better to stay away from finance-related companies, NBFCs, banks as of now. We've already seen a run-up, and we might see some kind of a deeper correction in banks. So as far as ICICI Bank goes, I would say that, if somebody is holding, keep a stop loss of 838. No fresh buying as of now. I think that, one should wait for getting into banks, especially the larger ones, ICICI, SBI and HDFC. We are seeing correction all over. So let's wait for, a few weeks and let the budget be over. And then probably, we can take a call on banking. But as of now, I don't see in the very near term that we can see any kind of fireworks in banking.
Okay, maybe now is not the time to be putting fresh money to play in the banking space. Kush, let me come to you as well on this. How is it looking for Bajaj Finance? I mean, would you agree with Vijay there that this is probably better, better to exit it at current levels? And do the other banking names look attractive to you, or do you think, similarly, you should probably stay away from this space for a bit?
I'm going to take a slightly contrarian view. The news, and the price movement, everything is quite negative for Bajaj Finance, at the moment. But, the kind of return that the stock has given and the kind of portfolio holdings, that AMCs have in this, the tide is bound to turn at some point. Now, where is the $1 million question, right? So I would suggest hold on. The good thing is that the buying price of the gentleman is at 5,500, which is still way lower from where the stock is currently. I would actually use this opportunity, as a buy on dips if he intends to hold this for like a longer term, let's say a couple of years time. 5,800 is where I will start accumulating, given that the fall arrests there. Worst case scenario, if the stock comes to his buying price, which is 5,500, that would still be a decent point for him to exit. But I would use this dip as an as a buying opportunity, given a long term view on the stock. Also, as far as the banking stocks go, they are under pressure, and I do agree with Vijay that a better time for these would be once the budget is over.
All right, got it. That is the view on Bajaj Finance and some of the bigger banking names, the likes of ICICI, SBI, and pretty much the entire pack. The next query comes in from Mukul Jain, who writes to us from Indore. He says he has 30 shares of ICICI Bank again at 900, and he has 40 shares of Hindalco, which he bought at 400. He's a medium-term investor, and he wants to know what he should do. Should he be holding this? Should he get out of it? Vijay, we already discussed that, maybe ICICI Bank is... You don't want to put fresh money here, but he's bought it at a very high price. Do you think it's just a good time to get out? Vijay, I think you're on mute, so if you could just unmute yourself.
Yeah. So as I said, I think that there might be a further crack, because all these companies have moved up quite significantly, and they're trading far away from the 200 DMA. And generally, in technical parlance, we see a correction in such stocks which are trading far away from 200 DMA. So I think that there might be certain correction which might be in store. Keep a strict stop loss of 838 and keep on holding. If at all it breaches 838, please get out, and wait on the sidelines. And at times, waiting on the sidelines is also a very good strategy when you're not able to understand, when there is selling across the sectors. So waiting is also a good strategy. But as of now, if you ask me, you can shift to OMCs, which I think should do well.
Okay, that is on, what he should do with ICICI Bank. He said he also has Hindalco, which he bought at 400 rupees. So he has made money on that. But what would you advise he do from these levels?
Metals, commodities should do well. Even if we see kind of a recession in Western countries. But I think that metals should do well, especially Hindalco, because it is also having Novelis in Europe. And I think that as things improve, because they're already gone bad, as things improve, I think Novelis should start doing better, and we might see that profit and that benefit coming on the balance sheet of Hindalco. So as of now, I'm fairly bullish on Hindalco with a target of 600. Keep on accumulating on declines and holding. If you're having it, keep on holding. I think that it can touch 600.
Okay, Hindalco could touch 600. Kush, your call on Hindalco. What do you think? Where could this, how much of an upside could you see in Hindalco? And within the metal space, do you think this is a good bet, or would you have other preference for some other stocks?
Hindalco most certainly looks good on the charts. I agree with Vijay that please hold on to the stock. My only addition to that would be that keep booking partial profits, because we know how fickle the news is that is coming out of China. Plus these stocks have had a bit of a hammering as well on the way down. So I wouldn't rule out some supplies on around 500 levels also. So it'll not be a bad idea to have to keep booking profits partially and hold on with a trailing stop loss of 445. As long as the stock maintains that the stock will keep trending higher. So keep booking partial profits and keep upping your trailing stop losses. That's the view on Hindalco. And one stock that I would like to add to the pack is Tata Steel. The charts are fairly strong. It has a bit of a resistance around 120. Once it crosses that, I won't rule out a move until 135 and 145 levels also. So Tata Steel is one stock that will be on my radar from the metal pack.
Okay, got it. That is on the metals. But another query comes in. This is from Jamshed, who writes to us from Mumbai. He has 100 shares of LIC, which he bought at 674 per share. He's a long-term investor, and he wants to know the future prospects of LIC. LIC, by the way, is at 711. Today is not, a good day for it. But Kush, this month itself, it is up around 10%. What do you think?
Well, it is, but let's not forget, this entire pack saw a bit of a movement. The entire insurance, life insurance pack saw a bit of a movement, right? And that was on the back of some news. But once that is out of the window, these do tend to see a bit of selling pressure. So since he's a long-term investor, the charts, whatever limited charts are available, they do seem fine right now. But I would suggest, keep booking partial profits, at slightly higher levels. Even at this level, he's still sitting in a decent profit. So keep booking partial profits, because the supply that we're seeing in this stock at 750 and thereabouts is pretty high. So keep booking partial profits along the way, and similar advice, which is hold with a trailing stop loss as the stock moves up.
Okay, that is the call on LIC. Vijay, what do you think about LIC? Do you think that he should keep holding on to his investments? And also within the insurance space, is this a good bet?
Well, if you ask me, within the insurance space, I like HDFC Life.
Okay.
But apple to apple comparison, I think that LIC should also move up, because I think within the budget there are certain rumors that we might see something happening in the insurance space. The government might allow the insurance companies to sell other products, and they might reduce the entry barriers, or the security deposit or minimum amount required to start an insurance company, which would actually help the entire insurance industry to grow, because India is a terribly underinsured country. So for all the insurers, life or non-life, it should be good. But LIC, yes, it would be losing share as people move up their share, the market share. But again, still, I think that LIC has the potential of scaling up to 800, 850. So long-term investors should stay invested. Yes, I partly agree with Kush when he says that if somebody has bought at lower levels of 600, 620 odd, then they should keep on booking profits as well. This is for traders, but long-term investors, I think that 800, 850 is quite possible. Keep on holding. It would take time, require patience.
Okay, it might require patience, but you can hold at the levels that our viewer has bought in at. The next query is from Shweta Jain, who writes to us from Madhya Pradesh. She holds 30 shares of Tech Mahindra bought at 1200, and also 15 shares of M&M at 1000 rupees per share. She's a medium-term investor once again and wants to know whether she should hold or sell. Let's talk about Tech Mahindra first. We have all of the IT earnings also next week. Vijay, after Tech Mahindra has seen a 40% kind of decline on a one-year basis, do you think there's much more pain left?
Well, I think that there is pain in Europe and US, both the Americas and entire Europe. And until we get some very clear picture about the economy there, these IT companies would either stay somewhere around, which they are here, or keep on correcting slightly. We have already seen 40% correction, which is huge. We might see another 10-15%. Because HCL also gave a guidance that their revenues would be skewed to a great extent. So this is the problem with most of the IT companies. Why TechM? Look at TCS or HCL Tech, or Tech. All the tech players for that matter. Every tech company has corrected because their guidance for most of the lion's share of the business came from US and Europe. So that is somewhere under the cloud. So maybe 6 months down the line, it would be a very good time to get into technology stocks. But as of now, I think that the pain would persist for some more time. And long-term players keep on holding. No problem. These stocks will definitely come back. But yes, people who want to enter afresh, they should wait for a while.
Okay, if you want to put fresh money to play, maybe wait for 6 months and then you could get a more attractive buying opportunity. Kush, you take us through your call on Tech Mahindra as well, and then we'll get to M&M. But what do you think of Tech Mahindra ahead of the Q3 earnings season?
Sure, if Vijay allows, my answer is a one-word summary of everything that he said, which is exit. The stock is in a bit of a pressure, and it looks like that will continue to be under pressure. And we are seeing supply zones at all levels. The stock is trading below its moving averages, all of them practically. So Tech Mahindra is a very clear exit for me. As far as M&M goes, a very clear call here also, which is of buy. The stock is trading a little lower than its recent highs of 1360 odd levels, but even that is in a consolidation phase, and that's just setting itself up for the next leg of up move. So I think Mahindra for me remains a buy even from here. The good thing is his buying price. The investor's buying price is at 1,000 and the stock is comfortably above his price. But then that's how you make big money, right? You buy into winning stocks and you add keep adding the more as they go up. So for Mahindra, I continue to maintain a buy position. 1360, which is the current high, is my first target. My next target here would be 1500.
Okay, got it. Vijay, would you agree? Mahindra and Mahindra is a buy at these levels as well. I mean, of course, our viewer gotten it at quite an attractive price, 1,000 rupees a piece. But you think this is a good one to hold?
Well, I think that M&M has done a stupendous job. The kind of models they have launched, I see a lot of XUV 700s, lots of Scorpio Ns, and new Bolero on the road, and even Thar, which is a rage with the youngsters. So I think that the kind of sales this company has clocked, that number actually forces me to say that yes, it is a good buy, but a long-term buy. We might see dips, but that would be opportunities to buy into the stock. Part of M&M is also into EV. A part of M&M is also into defense. So it's a well diversified company for that matter. And I think that on dips one should buy M&M. My personal target for the stock is 1400, and it can go there. So yes, keep on nibbling into the stock on every decline.
All right, that makes it easy for our viewer. Both of our guests agree that this is a good one to have in your portfolio. But with that, Vijay as well as Kush, I request you both to please stay on. We're going to take a very short break, but we'll be back in 2 and we'll take lots more stock queries on the other side. Hey guys, welcome back. You're still tuned into your stocks on CNBC TV18, and we still have Vijay Chopra and Kush Bohra to answer all of your stock related queries. So they're still with us. The next query comes in again on the auto space. We have Himanshu Kumar, who writes to us from Patna. He holds 40 shares of Tata Motors, which he bought at 400 rupees a piece. He says he's a medium-term investor and he wants to know what he should do with his investments. Should he wait for any kind of up move in the stock? Kush, this has really not been, a good month, right, for Tata Motors. We've seen a near 10% downtick. But do you think with a medium-term perspective, he could recover this loss?
You're right, actually, and I'm going to just stretch it a little. And it's not been a good 6 months for Tata Motors, at least the stock. There have been times when the stock has seen a bit of a bounce, but it's faced resistance and supply pressure at all levels. Barely a couple of days when the stock has held on above its 200-day moving average. So for me, this stock currently is in a downtrend and will remain so for some time. So for me, this would be an exit. I mean, if he is still attached to it, then 360 is perhaps a level where he could look at exiting. But there's a possibility that it might arrive sooner than later. So best to exit right now at these levels and look to enter at probably lower levels or some other stock that he prefers in the entire space. M&M is one case in point that we discussed just a while ago.
Okay, Vijay, do you agree that this one is perhaps better to get out of Tata Motors? I know you said M&M is good, but if there's any other alternate that you would like to suggest within the auto space, also please go ahead.
Well, yes, we have seen Tata Motors growing in the EV space. They are the top players in the country, and the kind of models they are getting into the market, it is quite encouraging to see the sales number. And Tata Motors has creeped to the top 3-4 players, and they've been selling good numbers. So there I'm bullish. But the way the stock has reacted, I would kind of agree that the markets are sketchy. We might see corrections, so there should be a stop loss of 365. If at all the stock goes down, I would be a buyer around maybe 320, 330 if at all it goes to that level. So I'm on the longer term, I'm fairly bullish on Tata Motors. It is a multi-bagger according to me. But again, the kind of damage we have seen in the last few days, I think that keeping a stop loss would be a best strategy, and that's not only for Tata Motors but for all the holdings you have. So keep on holding with a stop loss of 365 is the call.
Okay, hold with a stop loss at 365. The next query coming in is from Swati Srivastava. She writes to us from Jammu. She says she has 50 shares of ITC, which she bought at 200. She's a medium-term investor and she wants to know whether she should hold or sell. ITC is closer to 335 now after that big rally that we've seen over the past year. Vijay, 53% higher in a year. How much more do you think is left here?
Well, ITC, there's a saying in the market that if you don't understand anything what to buy ITC. And it has proved to the T that ITC is a bellwether and a good stock to have at any point of time, whether it's good times or bad times. But ITC seemingly is a good buy. Even now, I think that around 330, 333 levels, it's a good buy. It has the potential of going up to maybe 360, 370. It's a slow mover. But yes, I think that it's a safer bet in such markets where there is huge volatility, where one day we see shorting and other day we see short covering. So generally the gullible investors are kind of confused what to buy, what not to buy. There's so much of noise in the market, but ITC is a safe haven, and longer term players can hold on to the stock. It gives you a better than FD return. So rest assured that your money is not going anywhere. So ITC is a buy, and I think that in the medium term it can touch 360 as well.
Okay, ITC is a good one to hold on to, and also, considering the price where she bought it at 200. So maybe if she could look at expanding her time horizon and holding it for a long period, that would prove beneficial as well. Kush, you agree? ITC, just buy ITC if you don't understand anything?
At least the last year has taught us that, hasn't it? And first time, I would like to congratulate her for buying this at such low levels, and more importantly, holding on after such a stupendous rally. Right now, the way the stock is structured, it's in a bit of a consolidation zone. For me, it's a buying opportunity, and 360 would be my first target, and 390 would be my second target. So I would in fact suggest, if the holding period is a long term, which it does look like it is, then I would suggest add more at these levels. The stock has come off its highs, so the payoff ratio will also be quite attractive. So not only hold on, but add more at current levels for ITC.
Okay, got it. Everyone loves ITC. Hold on to it, at least for now. And you've made good money on it. So, of course, congratulations on that. The next one coming through is Mohit Aleja, who writes to us from Bhopal. He holds 15 shares of Titan, bought at 1445. He also has 30 shares of Bata, which he bought at 1265. He's a medium-term investor, and he wants to know whether these stocks can surge further or if it is a good time to book profits in these. Kush, how do you look at Titan as well as Bata? Titan, of course, has done quite well. I think ever since July, it's been picking up.
Oh, absolutely, it has. And there's a bit of a sideways movement, with a mild negative bias, but nothing to worry about, because the stock's comfortably trading its, to above its 200-day moving average. All the dips are being bought into. In case there is a crack, for whatever reason, for a reason not connected to the stock per se, I would suggest 2460. That's where I would place my stop loss and continue to ride this wave. A similar story for Bata. The stock has seen a bit of a correction, but it's very close to its support zones. So my suggestion would be, don't look to exit just yet. If it breaks 1580 is when I would look to exit Bata. I know the fall is quite steep from 2000 levels, but right now it's trying to find a bottom around these 1600 1580 levels. So if it breaks 1580 is when I would exit. Up until then, I would hold on to Bata as well.
Okay, hold on to both of these. On that note, Kush as well as Vijay, we're going to thank you. Thank you very much for joining us and taking out the time to take us through all of these queries. But with that note, we have to wind down on this edition of Your Stocks. The news that the market is still suffering a 175-point downtick. So it is looking weak across the board, led by the financials, also some of the IT names under pressure. But we still do have 1 hour of trade left. So stay tuned. Closing bell comes up next for that.